What's up, Trader's Edge? It's Mark Sebastian, your only option. Today, we're going to talk about what happened with the markets. We're going to talk about Oracle, Apple, Amazon, and then we're going to preview CPI and do a little bit around the Federal Reserve. So with that, let's dig in. On Wednesday, the S&P 500 closed at a new all-time high, 65.32, up 0.3%. The NASDAQ, new high as well, 50.80, spot 70. Now, we did see some weakness in the Dow Jones Industrial Average. Where did that come from? Apple was down big on China tariff news. Amazon was down big on China tariff news, as were several others. Now, those that were don't have exposure to China, names like Google, pretty good day. Names like, not Meta. Meta had a rough one, but Broadcom. And then how about Oracle? Oracle picked up 40%, almost 40%, 36%, over 40% at its peak on Wednesday. Now, remember, Oracle was already worth over $400 billion. This is just, massive in terms of a market cap change and complete change to the eye level. When I look at it, I say to myself, boy, this is something I want to think about shorting. But do I? No. Why not? Because when you get a move like this, you need to give it a day or two to let things play out. Let them play out. Allow markets to move one way or the other. I mean, you don't want to be trying to short this as it buzz saws higher. The approach is to let it pull back a little bit and then make a decision to get involved or not. So Oracle, just my goodness. Now, SPX, heading into CPI, markets are pricing in, call it a 37-point move. Now, if you watched yesterday's video, we talked about the September 11th options. The 6520s were priced at $44. At the peak of trading day, the 6520 calls were worth more than that entire straddle. And then when the market rolled over and got to almost unchanged as it did down here, those would have been in the money and you would have been selling them at $20 plus. There was a potential 50% return in a trade that had no exposure to this market other than if it didn't do anything. Pretty crazy. And now, what do I think ahead of CPI on Thursday? Yet again, I'm playing. I don't think $37 is enough. I'm going to play around in this. Looking at the VIX, VIX tried to tank. Then the market rolled over, and the Dow started to roll over, and it pulled back. And then I'm going to have to briefly talk about this. Violence is terrible. I'm sure by now you're aware, Charlie Kirk was assassinated. That's never the answer. And not talking about the politics of it or anything around that. There is going to be some market effects in this. Markets are going to be wondering what is the reaction, what comes out of this, how does this play out. That could keep VIX a little bit higher. But yeah, Charlie Kirk was 31 years old. Just terrible. All violence is terrible, whether it's a kid in Chicago or a famous person such as Charlie Kirk. So getting back to markets, last on my docket, there is kind of some reason for uncertainty around the Fed next Wednesday. And that's because they're now pricing in an 8% chance of a quarter point rate, of a 50 basis point rate cut in September. It's not going to happen, but it's starting to price in. And if you go to December, they're starting to put in some odds for a fourth rate cut, and we're now almost certain at a third. Looking at those options expire on the 17th. The market is pricing in about $79, $80. Call that 1.25%. Not expensive enough, folks. There needs to be more juice in that. It is not properly priced. I don't know how many times I have to warn you about this event, but what I'm be watching for is really not what the announcement is, but what is in the statement and what is Powell's positioning around this. That is going to be very important, and that is what is going to drive markets and kind of set the tone for the rest of September. So just kind of be on top of that, and that's 2 days before quadruple witching. Also aligns with VIX expiration, so there's a lot of balls in the air there. Could be an extremely interesting Wednesday, Thursday, and Friday next week as we deal with quadruple witching and the Federal Reserve. All right, folks. There you have it. CPI, options underpriced. Fed, options underpriced. VIX could be a little bit bid here. One, because of what happened today, and two, because of the Federal Reserve and a few other, and quadruple witching going into next week. Best way to approach this is with a two-way trade. Don't know what that is? Click this link. And if you're watching me on YouTube, please like and subscribe. I'm Mark Sebastian. I am your only option. I hope you have a great rest of your day.